Brad, thank you for being here. My name is Austin Lawrence, mountain biking mortgage loan officer, NMLS 225079. I just want to address kind of this short video on closing costs. I get a lot of questions about closing costs, and people are confused. We have a great handout, which I would love to share with you. Just ask for it, and I will send this out to you. I usually do this as part of my presentation, but let me just kind of shortly go over what are closing costs. Closing costs are all of those things that you will spend in the process of buying your home. So we've broken it down into four main components. And this usually just kind of encapsulates all of those costs so that you can kind of break down. And then, of course, when you are applying, you should have a funding fee sheet, which would tell you and give you a breakdown of all of the costs associated with your particular loan. So there are four categories: down payment, bank fees, title and escrow, and then prepays. I want to start with number two, bank fees, because this is probably the one that's most confusing for people. There is costs associated with the actual loan, and there are costs that you as a buyer will have to put out upfront when you're going through this process. And those can be a little confusing because you're thinking, why can't I just finance that in, et cetera? So origination, processing, underwriting fees, those are all part of that actual loan process. But on the side of that, what you have to be aware of is there are some upfront fees. You will have an appraisal fee. You will have credit report fees. You will have flood cert fees, and you will probably have inspection fees because you want to have the house inspected before you actually make your bid or in the beginning process before you secure that actual RPA, a residential purchase agreement, by signing it. So then we also have some other fees that are important that you need to just be aware of, which is down payment, obviously. I just didn't want to skip that one in completely, but obviously you need to know about down payment. Earnest money is the money that you put up front. It's usually 1 to 3% of the purchase price, and that's just kind of a down payment to secure your spot in the escrow. The other fees that are important are title and escrow. You should have a title company and you should have an escrow department or escrow company that is also helping out with this. They will have policies, fees, etc. Your notary, title insurance, owner's title, stuff like this that is associated specifically with a loan, which I go through individually with people when we're getting into that process. So reach out if you have any questions about that. And then finally, prepays. This is a little bit confusing because what happens when you do a loan is that we have to calculate when the closing date is versus covering insurance, covering your first payment, and stuff that goes into the escrow process. So some of those would consist of your interest, your property taxes, homeowners insurance, and the escrow account in itself having the earnest money and stuff like that. Prepays are usually outside of the actual loan process because they are done through the tax, obviously the county taxes and state, city taxes that are associated with the property, and your other insurance that you're going to have, which should be in a separate outside of this, which is not the same as title insurance. This is actual homeowners insurance, which you have to protect you in case of, anything happening to the home. I hope that gives you kind of just a brief introduction to that. I didn't want to make it too long, but please reach out. I would love to help you out. If you like this video, please definitely share it with people, and any of your comments I will definitely address as I see them. Otherwise, thank you very much. My name is Austin Lawrence, and I look forward to seeing you on the road.